Welcome back. My name's Amar Shah, and today we're going to be talking with Kyle from Fidelity Charitable. Kyle does a lot of work with Fidelity in the charitable space, specifically around the most tax efficient way to give to charities. I guess would be kind of like a summary of your role, right, Kyle?
Oh,
Uh,
definitely.
and so today we want to talk about QCDs. And Kyle, what is a QCD? What does the acronym stand for? Let's start with that.
Yeah. So a QCD is a qualified charitable distribution. And what it allows folks to do, it's basically a direct transfer of funds from your IRA account payable to a qualified charity. It's a really, really tax advantageous strategy for folks that are looking to give to charity when they're retired.
Cool. And who qualifies for the QCD?
Yeah, so the QCD age is 70 and a half or older. Now, a lot of us that are probably listening in realize that the IRA distribution, required minimum distribution age is 72 now, but the qualified charitable distribution stays at 70 and a half. It's really important for folks to realize that as they get closer to that 72 age and you start building up a bigger and bigger balance in your IRA account, if you're giving to charity in any way, shape, or form, this could be the best way to do it.
Yeah, and why is it the best way from a tax efficiency standpoint? I think that would be something good to kind of cover from a high level perspective.
Absolutely. So, in addition to the obvious benefits of supporting your favorite nonprofits, a QCD essentially excludes the amount donated from taxable income, which is unlike regular withdrawals from an IRA account, right? So, by making a distribution from the IRA account directly to a nonprofit, the donor essentially doesn't have to realize that portion as income. And the benefit for them is that it satisfies a portion of or the entirety of their required minimum distribution for that year. Now, that's capped at $100,000 per year, but that for most folks will be okay.
Yeah, for most folks, their RMDs are typically less than 100,000, right?
Right.
But let's say if your RMD is above 100,000, how could you pair the QCD with a donor advised fund or other vehicles to be in a tax advantaged way? And just what I'm thinking, just off the top of my head here, is that if you have the QCD due up to 100,000, then you have taxable income from the remaining of your RMD going to your taxable account. And let's say you're going to buy stocks in companies that you already own. Well, you can transfer the ones that you've already owned that you probably have gains into your donor advised fund and then repurchase with that after tax money from the rest of that RMD and get some offset from the taxes from the IRA. Would you agree?
I do, and it's a good strategy to think of. The interesting thing, though, is that the qualified charitable distribution doesn't require individuals to itemize in their taxes, right? So, like, there's no tax deduction when you give the qualified distribution from the IRA account to the charity, but when you actually give pre-tax dollars or appreciated stock held in non-retirement accounts to a donor advised fund or to a charity, in order to take the tax advantages for it, you do have to itemize your deductions. So that's always a key factor, and obviously worth checking with the CPA when you're doing this.
Yeah, and that's big. So you don't have to itemize, right? And you can take advantage of because the donor advised fund, when you're doing lump sums, you have to itemize in order to get that benefit.
Yeah. Exactly. Right. Same with giving to regular charities, right? So it's the easy way to think about it for a lot of folks is married filing jointly is about 25,000. The three popular deductions left are state and local taxes. That's property tax, but that's capped at 10,000 a year. Mortgage interest and charitable giving. So in your example before, if you're somebody that maybe maxes out the $10,000 in your property tax, doesn't have a mortgage, you have to give away $15,000 a year to charity to take the same tax deduction as if you didn't give away a penny, right? That's the hurdle, the standard deduction of 25,000 versus your itemized deductions being more than that. So that's why the qualified charitable distributions play really well with retirees, because, hey, you can give that amount, not have to pay tax on it. And at the end of the day, if you don't need the cash in this year, it's a great way to support your favorite nonprofits.
Yeah, awesome. And I guess like from a paperwork tracking process, I know Fidelity, when they issue the 1099-R, from the retirement accounts, they don't itemize if it went to a charity or not, right? It's just the gross amount. So one thing to kind of let people know is that you should track which dollar amount, the amount, the date, and the dollar amount that went to charities, because your tax professional will need that in order to complete the tax return properly.
That's totally right. And it's so important to know that, because a lot of times charities will issue their donors a tax receipt for their gift, right? And the qualified charitable distribution is just reported as any normal distribution on that form 1099-R that you just mentioned. So it's super important that at tax time you have the backup support from the charity to say, yes, we received these X number of dollars on this date, so you can match it up with the distribution on your tax form.
Yeah, no, that's great. So let's say you do this QCD. Is there any charities that you can't donate to through the QCD?
Yes. So you cannot give to private family foundations, which are just grant making vehicles. Donor advised funds, same thing. A lot of folks ask me the question of if they can give to individuals, like gifting. Can't do that either. The charity has to be a 501c3 public organization and eligible to receive tax deductible contributions. So can't use really a giving vehicle to help out on this, but if you give it directly to the charity, it works out well.
Sounds good. Sounds good. Well, thank you, Kyle. If you have any questions or comments, please leave it below. Please also hit that like button. It allows for other people just like you to find some of the content that we're creating, which is all educational, and it's all good stuff. So thank you for watching. Thank you.